Welcome back. The National Treasury should focus on broadening the tax base to boost collections to fund the next budget. Ernst & Young, Associate Partner for Tax, Robert Minor, projects that debt servicing as well as pension obligations are likely to increase in the 2025-2026 financial year as more civil servants and state officers attain retirement age. Our reporter Regina Manyara explored the likely areas of focus in this year's budget during an interview earlier with Minor. Take a look.
The proposed budget, 4.2 trillion shillings for the financial year 2025-2026. Is this attainable in the current economy we find ourselves in? Joining me, Regina Manyara, on KBC Channel 1 is none other than Director Tax at Ernst & Young, Robert Minor. Thank you very much for your time. So, is this attainable?
Well, thank you very much for that, Regina. I mean, it's certainly an ambitious budget, absolutely not. I mean, at 4.2 trillion, and we are seeing the current economic situation where we have, the general economic situation. We have a lot of complaints in terms of how the economy is performing, as to whether the results of the economy actually cascaded down to the general citizen. So with the current proposed budget, I think it's a bit ambitious, and the government will have to do a lot to be able to actually finance that budget. Because the first thing is, yes, you can come up with a very ambitious numbers, but the question is, how are you going to finance that budget in the first place?
What could have fueled this uptick or rather increase in budgetary of the proposed budget given 2024-2025, we had around 3.9 trillion shillings. Now we're looking at an increase to 4.2 trillion shillings. What could have influenced this?
Now, historically, what we have observed in this country, we have a trend where we have just on an annual basis, generally speaking, been increasing our budget without generally looking at whether the economy can actually support that. Because if you think about, let's say, 5 years ago, the budget has actually been increasing year in, year out. So, and we've had the National Treasury speaking about zero-based budgeting, where they would actually request every ministry, every department to make sure that they actually start building their budget from scratch to a point where we can actually justify every item that's going into that budget. Unfortunately, we haven't done that. We have been looking at a case where we're just growing and increasing our budget estimations every year without having proper basis that are supported in terms of the expenditure that is there.
What are likely to be the priority areas, in 2025-2026 for government spending?
One, I do think that the government will definitely focus on better. I mean, they really want to focus on their bottom-up economic transformation agenda, because that's the manifesto that brought them into power. So if we are looking at issues to do with agricultural transformation, we would expect a substantial amount to go into that. But like we have seen in the budget policy statement, the allocation to the sector is still quite low at about 5%. Which is still quite low compared to the Maputo Declaration, which requires that the country should allocate at least 10% of our GDP to agriculture. So that is one of the items, one of the areas we expect quite a bit of money to go into. Then healthcare is the other area. Now, on the issue of healthcare, I think there's a whole debate, because at the moment we have the increased payments now in terms of the social health insurance fund, where the population or the citizenry are paid quite a lot into this kitty. Now, the balance between allocation from the exchequer and what to be paid by the individual citizens from their contributions is where the government has to play very well, just to ensure that, for instance, we have seen what is happening in the US. Donations that were coming to the healthcare space are no longer coming.
We are around 27 billion that we will not have in this financial year.
Absolutely, yes. So balancing that just to ensure that we do not have a gap, because the kind of financing we are getting from the external players is not coming in, is an important element that the government has to ensure that they address. And we are hoping that they'll actually address that, because as we know, I mean, these things are happening on a continuous basis, and so we have to keep on realigning the budget. The other aspect that we would expect is obviously education. I know over the years, that has been the biggest consumer of our taxes. We have the people moving into the senior secondary school.
And the crux of the matter, how do you think Treasury intends to finance this budget that you have termed as ambitious?
Well, now financing is the biggest headache for the National Treasury. And it is good that, one of the positives that I've seen is that it is good that we actually see people who are seated in the National Treasury, they actually appreciate that they're actually facing a huge challenge, because what we are doing now, again, we have had those annual increments in terms of how much do we expect to correct. Again, at times, I do believe they may not be informed by proper economic analysis, because you cannot have year in, year out very huge expectations in terms of revenue corrections. You do not meet them, and then in the subsequent year you have the same repetition in terms of having huge targets.
The taxman has been given a target of around 3 trillion shillings. Given the history that we've had, do you think that this is feasible?
These taxes, they come from the economy. And if the economy is not performing very well, or there is no trickle down of the economic benefits, because I think when this government came in, they talked of ensuring the hustler or the benefits of the economy are trickling down to the economy, and every other person is enjoying that. But I think when you speak to people on the ground, the reality seems to be different. So who are these people who are going to pay these additional, almost an additional billion Kenya shillings, when the economy is not doing very well? I mean, the government is trying to reduce the cost of credit to spur the economy. But are we likely to get the benefits that fast within a year, that the economic benefits will be realized? It's highly unlikely to be done within a year. So it's a very ambitious target. And, you saw what happened in 2024. The government wanted to raise an additional 300 billion. Now, that led to the protests that we saw. But if you check the historical basis of the finance bills we've had, the average increments have been within 50 billion to 100 billion. If you come up with a finance bill where you want to raise an additional $500 billion, obviously that will not face, it will face a lot of resistance.
We're coming from a situation where we saw, members of the public protest against the finance bill 2024-2025. In your opinion, as a tax expert, what should government not do this time around?
What the government might try to do this time around, instead of going for new taxes, they might want to review what are the benefits that people are enjoying. For instance, the exemptions. We have quite a bit of exemptions. And it's an easier route that may not attract a lot of attention from the general public. So if you look at the VAT exemptions we have, and that's what they've been doing, they repeal those exemptions. If you look at the income tax, we have quite a number of benefits that were being granted. What they do is that they take away the benefits. A few of them every other year. They don't attract a lot of attention, but they are able to raise a bit of additional revenue. So raising additional taxes from new taxes is a bit difficult. But what we have seen is that the issue of levies. For instance, we started with the issue of the levy that was introduced on certain, let's say, the clickers and all that. We've seen adjustment in terms of the rate of other levies. So it seems like the general direction is the government is also imposing levies. Again, levies, people may not be so familiar with levies, so they might want to play around with certain things that are not going to attract a lot of attention from the general public, just trying to balance that.
We have been seeing the regulator, that is the Central Bank of Kenya, move to ensure that the private sector gets access to credit by lowering its rates. But then, on ground, it indicates that the monies are not trickling down in terms of credit access to private sector, with the government intending to borrow at least over 600 billion shillings to plug the 831 billion shillings deficit. What impact will it have?
That's obviously a challenge that is actually affecting this country. And unfortunately, what we see is that banks are very quick to raise their lending rates anytime there's an adjustment. But anytime there's a reduction, they are very slow to adjust those rates. Now, the question is why? one banker might say it's because we are already holding deposits which are already expensive. So obviously banks lend from the money that you and me give them. So some of them might argue that is the reason why they are not able to adjust that fast. But I think what we are seeing is that the central bank is trying to apply other measures to encourage bankers, because the other thing is that we have seen the non-performing loans, they've been quite high. And obviously for bankers, it also doesn't work for them when they have very high non-performing loans. So we hope over time, the various measures that are being taken by the central bank will actually encourage our bankers to actually reduce the rate to a reasonable level.
Now, is the risk-based lending meeting its objective?
Absolutely, yes. And there's a whole debate as to how whether that model works, because, obviously what that model does is that if you are deemed to be a high-risk person, then your borrowing rate is also very high. So at times it negates the real purpose of that, because if I'm a high-risk person and you are lending me at 20%, 25%, then the risk of default is also very high, because the interest I'm paying is also on the higher side.
On debt, government intends to diversify its currency of debt, moving away from the dollar. What impact will this have?
Yes. So what we have been doing, and I think over the past few years, we've been focused on the Eurobonds. Eurobonds are generally issued in US dollars. Now, what that has done is that that has posed a risk in terms of if we have a major fluctuation in the dollar rate, then our debt levels is also affected. And the other thing is that we are focused on certain markets. Now, the government has appreciated that Kenya is also trading with other countries, such as China, Japan, the UAE, and all that. So the intention there is then to try and get money from other countries, such as Japan. You get it in Japanese yen. You go to China, you get it in the yuan. What that does is that the currency you are given, or the money you are given, you can actually use it to service Chinese debt in that currency. But the key thing here is, as you get this money in those other currencies, the government has also be keen and ensure that they negotiate with these other countries such that we can actually pay their loans in their own currency. Because I know there are situations where you find some countries insisting they want to be paid in dollars, yet that's not their own currency. So the balance between ensuring that, yes, we go for these other boards, the PADA boards and all that, but we ensure that we also have contracts where we have negotiated payment in their own currencies to mitigate the foreign currency risk with that.
Austerity measures or fiscal consolidation is something that we have heard about, but then is it followed on ground?
I think that's where we have an area where we need to really check in terms of where the areas where we can optimize. But it is also good to appreciate that in any economy across the world, government is normally the biggest consumer. So if the nature of consumption or the services they are consuming are actually proper, for instance, if they are seeing accommodation facilities, training facilities, building of roads and all that, and they actually pay on time, because the key thing is the government is consuming a lot, but they're actually not paying. So the money that should actually be going to the economy, to actually spur the economy, is actually stuck at the National Treasury. And that's why the whole issue of the pending bills. And I think it's one of the issues that is actually affecting the economy, because the circulation of cash in the economy has really gone down, because you have actually provided a service or goods to the government, but there is no cash. So you have no money to pay your workers, you have no money to pay your suppliers. So the knock-on effect of the failure by the government to actually pay for their services on time is bigger than even the yield of them spending a lot. Because I think if they actually spend a lot and that money comes back to the economy and circulates, the economy will in a way actually grow, and there will be positive impact.
Can Kenya survive without debt?
I think I'm a bit, I would say it's a bit on the higher side, our debt appetite. But the problem starts from the fact that we are budgeting, our budget is extremely high. You can't, because, you only finance, the two main sources of financing is either debt or taxes. So if you set up a very high budget, and the taxes that you are able to collect, because you only have a very minimal way of adjusting taxes. then you'll end up getting more and more debt. So if we resolve the main issue of ensuring that our budgets, either we manage how much we are budgeting, or we get to the zero-based budgeting, where now we can support every budget item, so that we check whether we actually need all these items that we have in our budget, then that might indirectly resolve the issue of the need to borrow more.
If you're seated in the hot seat at Treasury, what areas would you prioritize?
Well, in terms of the amount, I may not have enough an amount of my mind, but I would say I would actually push the zero-based budgeting, because what that does is that if you come from a ministry and you tell me your budget this year is X amount, I would want to see exactly what are you doing, what you are doing trickling down into the economy. So for instance, if we are saying it's a Ministry of Agriculture, where is the money going? Is it going into conferences? Is it going into people just traveling overseas to do some case studies? Or is that money actually trickling down to the farmers, maybe through extension officers, supporting through giving them proper, maybe seeds and all that, fertilizers. So actually getting to understand whether the expenditure that is actually being booked is actually going to the right places, or that money is actually being, used in ways that are not productive to the economy. So it will be more of a thorough analysis, and I think it seems like there's a good intention to do that, but now we have not seen actually that being done. So we hopefully that is done.
Are we looking at more taxes with the Finance Bill 2025-2026?
What happened last year? We saw taxes such as the motor vehicle tax. Even those in government had issues. They were not able to explain what they are, what was the intention. So just imposing taxes for the sake of, and unfortunately what was happening then, I remember even the members of the National Assembly were saying, if you tell us to do away with this tax, how are we going to raise this 57 billion planned out of this tax? So that kind of reasoning is actually what led us to where we were. So we need to think of, in a new tax, if we think of any new tax, it should be well thought out. What is the impact? What is the rationale? Are people being taxed maybe through other ways? Or is there a better way of achieving the outcome? So making sure that we don't impose taxes which are not well supported or well thought out. I think that's where we need to ensure we don't go.
Thank you very much. We have been speaking to none other than Robert Minor, who is the tax director at Ernst & Young. And what he says is that we need to apply prudence when it comes to matters finances, especially now that we're looking at the proposed budget 2025-2026. I'm Regina Manyara. You're watching KBC Channel 1.